Distinguished shareholders, ladies and gentlemen, could we please rise for the national anthem? Please be seated. Good morning, distinguished fellow shareholders, my colleagues on the board of directors, those present here and those joining the meeting virtually, members of the Statutory Audit Committee, representative of the Nigerian Exchange Group Limited, representative of the Securities and Exchange Commission, and representative of Messrs. Ernst & Young. My name is Dan Agbo, and I am the non-executive chairman of UAC of Nigeria PLC. I am delighted, truly delighted, to welcome everyone to the annual general meeting of our company. Physical attendance at today's meeting has been restricted in compliance with the guidelines of the Nigeria Center for Disease Control and the Corporate Affairs Commission. This meeting is, however, being streamed live so that shareholders can observe the proceedings virtually. Today, I will report to you on the performance of your company for the year ended 31st of December 2020. Apart from the election of members of the Statutory Audit Committee, voting at this meeting shall be by poll. Our outgoing external auditors, Messrs. Ernst & Young, shall serve as scrutineers of the voting at this meeting. I now invite the representative of Africa Prudential PLC, our registrars, to read their report on proxy forms received for this meeting.
Thank you, Mr. Chairman.
Sorry.
For the purpose of this
Sorry, just one. Yes, please go ahead. I'm sorry.
Thank you, Mr. Chairman. For the purpose of this meeting, we received 427 proxies with a total of 1,267,196,461 units of shares, representing 43.98% of the issued share capital of UAC of Nigeria PLC. Thank you.
Thank you. Ladies and gentlemen, we're in a brave new world. We're doing things differently today from how we did it last year and from how we did it in 2019. And one of the changes I would like to ask that everyone here accommodate is that all speakers at the meeting should remain seated while speaking, as this will make it easier for our able media team to film the proceedings. We also have microphones set up in this venue that will capture what speakers are saying, even if the speakers remain seated. I hope that this is acceptable. Thank you very much. And with your kind permission also, do I have your permission to remain seated while I continue to address you? Okay. Thank you very much. I have been informed by the company secretary that we have a quorum and can therefore proceed with the business of this meeting. Company secretary?
Yes, sir.
Thank you. This meeting is too quiet. We want the meeting to be engaging and participatory. Please, we get to meet once a year. Motions will be moved by me, and seconders of each motion will come from any person present who is a shareholder. I would ask that those who wish to second motions or ask questions should indicate their intention to do so by raising their hands. I will call on such persons, or I'll invite such persons to speak as appropriate. When called upon, please remember to remain seated and grateful if you could speak clearly so that what you say can be captured by the microphones in the aisles. Again. Shareholders or other persons making contributions to the proceedings should start by introducing themselves so that the secretary can note the names of speakers in the minutes of the meeting. Only shareholders or their proxies may address this meeting. Speakers should please restrict their questions and comments to the matters under consideration as set out in the meeting agenda or contained in the annual report. I would also be grateful if all mobile phones and similar devices could be placed in silent mode. Just to make sure I'm not a guilty party, I'm checking mine. I'd like to highlight that UAC's statutory registers are available for inspection. I'd like to now introduce you to the members of the board who are present either physically or virtually. Physically present with us and to my right is Mr. Fola Ayeshimoju, the Group Managing Director of your company. The other members of the board who are present virtually are Dr. Vitus Ezinwa, the Chief Operating Officer of the company. Dr. Okechukwu Mbonu, a non-executive director. Dr. Umaru Alka, a non-executive director. Mr. Babatunde Kasali, a non-executive director. Mrs. Suzanne Iroche, an independent non-executive director. Mr. Bolaji Odunsi, a non-executive director. Mr. Carl Toriola, an independent non-executive director. The profiles of the members of the board of directors are on pages 40 to 42 of the 2020 annual report. To my left is Ms. Nkem Agboti, our Company Secretary, General Counsel. I'd like you to give her a particularly warm welcome because this is her first AGM.
Thank you, sir.
To my extreme right is Mrs. Funke Ijaya Oladipo, our Group Chief Financial Officer. Also physically present with us at this meeting is Mr. Matthew Akinlade, a member of the Statutory Audit Committee of the company. The other members of the Statutory Audit Committee who are attending this meeting virtually are Mr. Olabisi Fayombo, the committee chairman, Mr. Nwosu Nnabike Kenneth, Messrs. Fayombo, Akinlade, and Nwosu are shareholder representatives on the committee, while Messrs. Kasali and Odunsi, who have already been introduced, represent the board of directors on the committee. The pictures of the members of the Statutory Audit Committee are on page 72 of UAC's 2020 annual report. Ernst & Young, our outgoing external auditors, are represented at this meeting by Mrs. Omolola Alebiosu. And Africa Prudential PLC, our registrar, is represented at this meeting by Mr. Obong Idiong. I would also like to thank the representative of the Securities and Exchange Commission, Mr. Julius Ipoga, who is present at this meeting, as well as the representative of the Nigerian Exchange Group, Mr. Bonaventure Onwuji. Okay. The Corporate Affairs Commission sends its apologies and will not be represented at today's meeting. Finally, and most importantly, I wish to acknowledge the shareholders that are physically present with us today, and also the shareholders who have joined us virtually on YouTube. But the shareholders who are here with us today, physically present, are Mr. Babatunde Majiagbe of Stanbic IBTC Nominees Limited. Mr. Majiagbe. Prince Anthony Omojola, Mrs. Olabisi Bakare, Mrs. Bakare, and Mrs. Oludewa Thorpe.
She's on the way.
She's on her way. Let us now proceed with the formal business of this meeting. I call on the company secretary to read the notice convening this meeting, which can be found on page 28 of the annual report.
Thank you, Mr. Chairman. Notice is hereby given of the annual general meeting of UAC of Nigeria PLC to hold at the 12th floor, UAC House, 1 to 5 Odunlami Street, Lagos, on Wednesday, June 30th, 2021, at 10 a.m. to transact the following business. Ordinary business. 1. To lay before members the audited financial statements of the company for the year ended December 31st, 2020, and the reports of the directors, auditors, and statutory audit committee thereon. 2, to declare a dividend. 3, to disclose the remuneration of managers of the company. 4, to re-elect Mr. Daniel Agbo and Mr. Bolaji Odunsi as directors. 5, to approve the appointment of KPMG Professional Services as the company's external auditors in place of the retiring external auditor, Ernst & Young. 6, to authorize the board of directors to fix the remuneration of the external auditors. And 7, to elect members of the company's statutory audit committee. Special business. 1, to approve 106,580,296 naira 30 kobo as the remuneration of the non-executive directors of the company. 2, to renew the general mandate for recurrent transactions with related parties as explained in Note 11 of this notice. 3, to pass the special resolution set out in Note 12 of this notice, approving the long-term incentive plan for employees proposed by the Board of Directors as described in the notes to this notice. And 4, to consider and, if thought fit, approve the following resolution as a special resolution of the company. Quote, that the Articles of Association of the company be and are hereby amended by the insertion of the following new article as Article 14. Quote again, acquisition by the company of its own shares. Subject to compliance with all applicable laws and regulations, the company may purchase any of its fully paid shares. End quote. Dated this first day of June 2021 by order of the board. Signed, Nkemdirim Agboti, Company Secretary.
Thank you. Thank you, Ms. Agboti. The minutes of the last annual general meeting, which took place on the 15th of July 2020, are available for inspection by members of the company during UAC's working hours. With your kind permission, I will take the minutes of the last annual general meeting as read. Thank you very much. I will now report on the affairs of the company during the year under review. The chairman's statement appears on pages 13 to 16 of UAC's 2020 annual report. In order that we might have sufficient time for questions, I would like, with your permission, for us to take the chairman's statement as read. Do I have your permission? Thank you again. I now invite Mrs. Omolola Alebiosu of Ernst & Young, our outgoing external auditors, to read the auditor's opinion.
Thank you, Mr. Chairman. Good morning, distinguished shareholders and board members present. My name is Omolola Alebiosu. The audit opinion is on page 74 to 79 of the financial statement. With your permission, I will read the audit opinion and basis for our audit opinion on page 74, then proceed to page 79 to read the report on other legal and regulatory requirements. Thank you. Independent Auditors Report on the audit of the consolidated and separate financial statements of UAC Nigerian PLC. Our opinion. We have audited the consolidated and separate financial statement of UAC of Nigerian PLC, the company, and the subsidiaries, together the group, which comprise the consolidated and separate statement of financial position as the 31st December 2020, the consolidated and separate statement of profit or loss and other comprehensive income, the consolidated and separate statement of changes in equity and consolidated and separate statement of cash flows for the year then ended, and notes to the consolidated and separate financial statements, including a summary of significant accounting policies. In our opinion, the accompanying consolidated and separate financial statements give a true and fair view of the consolidated and separate financial position of the group and the company as at 31st December 2020, and its consolidated and separate financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards, the provisions of the Companies and Allied Matters Act 2020, and in compliance with Financial Reporting Council of Nigeria Act No. 6, 2011. Basis for our opinion. We conducted our audit in accordance with International Standards on Auditing, ISAS. Our responsibility under those standards are further described in the auditor's responsibility for the audit of the consolidated and separate financial statement section of our report. We are independent of the group and the company in accordance with International Code of Ethics for Professional Accountants, including International Independent Standards, IESBA Code, together with ethical requirements that are relevant to audit of the consolidated and separate financial statements in Nigeria, and we have fulfilled our other ethical responsibilities in accordance with these requirements and the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to form basis for our audit opinion. Page 79. Report on other legal and regulatory requirements. In accordance with requirement of fifth schedule of the Companies and Allied Matters Act 2020, we confirm that 1. We have obtained all information and explanation which to the best of our knowledge and belief were necessary for the purpose of our audit. In our opinion, proper books of account have been kept by the group and the company insofar as appears from our examination of those books. And the group and the company consolidated and separate financial position and consolidated and separate profit or loss and other comprehensive income are in agreement with books of accounts, signed by Omolola Lebioshu on behalf of Ernst & Young, dated 31st March 2021. Thank you.
Thank you, Mrs. Alebiosu. And welcome, Mrs. Thorpe. I now invite Mr. Matthew Akinlade to read the Statutory Audit Committee's report.
The chairman of the board members present and watching virtually, regulatory authorities present and watching virtually, my colleague shareholders present and watching virtually. Good morning. My name is Matthew Akinlade. I read the report of the audit committee on behalf of the chairman of the committee. In compliance with section 404, subsection 7 of the Companies and Allied Matters Act, CAMA 2020, we have reviewed the consolidated and separate audited financial statements of the group and the company for the year ended 31st December 2020 and report as follows. A. The accounting and reporting policies of the group and the company are consistent with legal requirements and agreed ethical practices. B. The scope and planning of the external audit are, in our opinion, adequate. C, the internal audit and internal control systems are adequate. And D, the external auditor's management letter was satisfactorily dealt with by management. Signed by the chairman of the committee, Mr. Olabisi Fayombo, on the 26th day of March 2021. Other members of the committee are Mr. Kenneth Unabike, Mr. Babatunde Kasali, and Mr. Bolaji Odunsi. Acting as secretary to the committee is the company secretary, Mrs. Nkem Agbuti. Thank you.
Thank you, Mr. Akinlade. We will now proceed to the ordinary business of this meeting. The first item of business for this meeting is to lay before you the audited financial statements of the company for the year ended 31st of December 2020, and the report of the directors, auditors, and of the Statutory Audit Committee. I now lay before you the annual report of UAC of Nigeria PLC for the financial year ended 31st of December 2020, which was dispatched to all shareholders on the 1st of June 2021. And I will be pleased, together with the Managing Director and the Chief Financial Officer, to take your questions and comments on the annual report before we proceed to the next item of business. Please raise your hand if you have a question, and kindly wait until I call on you. Once called on, please state your name and, where relevant, the Shareholders Association that you represent before asking your questions or making your comments. To aid our responses to each question, may I ask that where such questions relate to the annual report, you refer to the page of the annual report that the question relates to. In asking questions or sharing comments, I would urge members to be as brief as possible so that as many questions as possible can be entertained. So, questions? Please. No, please.
Good morning, Chairman, other directors, regulatory authorities represented here, my colleague shareholders. My name is Prince Dr. Anthony Omani Omojola, the current national chairman, we call ourselves coordinator, of Independent Shareholders Association of Nigeria. I'm delighted to be here this morning and for this year the company's annual general meeting. I bring the wishes of all members of our association
to the board, management, and staff of our company. And we wish to appreciate the grace of God on all of us for being alive up to this moment, having gone through the COVID-19 pandemic, and we pray that we all survive it all. We managed to send in just 4 pages of extract in our review, but I would combine that with some other area which I have noted in the annual report and accounts. So as for the review that have been sent, I'll just read one paragraph there. I will go inside it so that I can minimize time. So we congratulate the board management on this annual general meeting of UAC of Nigeria PLC on 2020 reports and accounts. We also commend your ability to navigate through the 2020 challenges with the rise of a global pandemic which affected businesses and people all over the world. Your ability to return the company to profit after about 2 years of running losses. We also appreciate the strategic initiative of partial divestment which builds up liquidity position of the conglomerate. We are proud of your wide diversification which spans over 9 companies covering 6 sectors with 4 strategic partnerships. We observe with delight the rejigging of governance and management in your various subsidiaries and associate companies. We attribute the hallowing performance to the strong and consistent board band management team. It is on this note that we cannot withhold our sincere farewell wishes to Mr. Ibikunle Oriola, the ex-group finance director, and Mr. Godwin Samuel, the ex-group company secretary. We thank them for their selfless services and contribution during their stay on the board. We wish them the best in their future endeavors, and at the same time we welcome with open arms Mrs. Funke Jaya Oladipo, the group financial officer, and Ms. Nkem Agboti, the company secretary, and urge them to put up in their best too in moving the ship forward to a greater height. I will believe the chairman have seen our write-up so that I won't have to repeat what I have put forward in those areas. But suffice to mention that I'll be referring to a few pages for references. We've gone through the report, like I said, and we appreciate the seamless changes in the leadership of the company and the group. This we quite appreciate. We also appreciate the well thought out detailed reporting from the chairman and of course the group managing director. All this we quite appreciate, and that has helped us to look at the running of the company, which so far so good. We believe is in the right direction. I hope going forward the company will become stronger and stronger as we have been able to manage to come out of the womb and be able to manage the strategic partnership in the ownership of UPDC between the 2 major owners, ourselves and the other insurance company. Okay. We noticed one thing, that is one, that we are operating in a new environment and we have to observe the going on. The new strategic investor is buying up more shares now of course, they put up a limit, but is that within the agreed margin? We want to be enlightened in that area. Okay. We also looking at pages, a few pages, but specifically on page 54, we notice that the company engages more professionals in terms of accounting firms. And the question is how far or how has the engagements of 3 biggest audit firms impacted on our company? Although they are doing different jobs, but our fear is that so that they don't have a clash in the process of carrying out their assignments. And of course, why did the internal auditor have to resign within 6 years? Because I understood we have up to 10 years. We could have an enlightenment there, or is it because of what their fear that this kind of thing is coming up? We want to know. Well, we noticed the good board committee meetings and attendance by the board and the subcommittees. This is well appreciated. I'm talking of the relevant pages of the meetings. I don't need to make reference to that. I'm on page 133, sir. Chairman, sir.
Page, sorry.
133.
Okay.
We noticed a few comments there. There's a write-off of inventory of net realizable value of 55.18 million. The previous year was 50.6. This year, 55.1. We are looking at these figures as being very big. Are we going to continue that line? Is it the nature of the job, or is there nothing that can be done to save this valuable amount we are throwing away? In the middle of that page, there's legal and professional expenses. We have, I'm looking under the group, we have moved from 154.2 million to 762.2 million. This is very huge. That difference is very huge. We want some words there. Going down some 4 steps, there's a loss of 68.4 million to lease termination. Is it because we didn't manage it, or is that part of the terms of the lease that we have to forgo 68.4 million there, sir? Again, going down that same line, some 6 steps downward, in the COVID-19 period, we thought traveling was a bit limited. The traveling expenses here in the COVID era moved from 125 to 263, over 100% leak. Then the AGM expenses are from 4.1 million to 57.2 million. This is very huge. We require some explanation. That takes me to page 135. We are aware some company has to relieve some staff in the course of the preceding year because of COVID-19. And we noticed our company too did something in that line, although we had a net of 90 staff here, for which we still appreciate the board and management for keeping the remaining staff. Well, we look at the scale there under emolument of highest paid director. This scale there, 2 lines, 101,000 to 15 million, then from 15 million and above. We are saying the scale here is not relevant or useful, as the gap is just too wide apart. Yes, I'm trying to round up. We look at page is 150 and 151. I think we just have one comment each there. I made on note 22, I made a partial comment on it before. Inventory. We have a huge inventory of, well, the net here is 20.12 billion. Does the business climate justify keeping higher investment as we have on this page, or that we experienced in the course of the year? And looking at the volume of the finished goods, which remain almost the same, we thought the raw material and consumables will be looked into so that we will be able to reduce the wastages. On page 151, sir, note 23, we look at the receivable there. It's quite reasonable. But when we look at the allowance for impairment, which is about a third of receivable, we think this is too high and should be well managed. Having said that, what is left is appreciation, and for some of them that know us, we do appreciate, but not too much, so that we do not let the thing go into the head. We want you to do more. So I will be writing up on page 169 on note 37.2 by extension. If you look at that pay, non-current asset has come down seriously from 4.1 billion to 666.3 million. And those figures there. The question is that what strategy is the management putting in place to turn around the fortune of UAC Restaurants Limited? That looks like the odd one there. And over the years, since it's on the negative. On events after the reporting date, note 38. How soon will this materialize? I don't want to read what you have said about the merger between CAP and Portland in there. But how soon will that conclusion there materialize? I want to say thank you very much for the opportunity given to me. And I want to believe that in trying to reply or study our little research work, both the written one and the spoken one will be combined.
Thank you very much. We find these comments and the other comments that are going to be made, we find them immensely helpful. It is important that the shareholders are engaged and that shareholders take a keen interest in what management are doing and ask. And this is the opportunity. Are there any? Does anybody else have questions that they would like to share? Mrs. Bakari, please.
Thank you, Mr. Chairman. My name is Mrs. Bisi Bakari, National Coordinator of Pragmatic Shareholders Association. Mr. Chairman, I've sent my questions earlier, and I would be glad if some of the questions can be answered this morning. I send it through the Company Secretary to the Chairman. I just have two comments. Just two comments because Evangelist Omojola has really touched some of my comments. So, but I just have two. Firstly, it's on page 60 to 62. I want to comment I want to appreciate our company for our sustainability reports in the areas of labor-related matters, corporate social responsibility, and our governance structure. This is highly commendable. They are on page 60 to 62 in the annual report and account. Secondly, I'll go straight to page 11, where we have results at a glance. Looking at 2020 result for the group, this is a very good result. Our revenue increased by 3%. Though our operating profits reduced by 37%, and our profit before tax declined by 31%. But nevertheless, I want to use this opportunity to appreciate the board management for the 2 dividends you are giving to us. That is the ordinary dividend and the special dividend. We appreciate it. And again, on the of course, for 2019, we have a loss of 9.3 billion, but this year we are talking of profit of 3.9 billion. This is very good, and I hope that the trend will continue. That come next year, by God's grace, we'll be talking of profit, not loss. And like Evangelist Omojola earlier said, that is on expenses. There are some expenses that they are on the high side. So I just I want the board and management, executive management, to look at those expenses, to find a way to reduce them, to give better returns to shareholders. On that note, I thank you for the opportunity given to me to be one of the bosses this morning. Thank you so much.
Thank you, Mrs. Bakare. Mrs. Thorpe, I have a problem here, Mrs. Thorpe, because I cannot see your face. Would you care to sit here? Good morning.
Distinguished members of the board, distinguished regulators, and my co-shareholders, both virtually and those here. My name is Thorpe, Mrs. Thorpe, Uldewa Thorpe, and I'm the National Secretary of the National Coordinating Committee of Shareholders Association. It's a body that coordinates the activities of the 7 zones of the Zonal Shareholders Association. I have also sent in some questions, which I believe if I become secretary would have made available. I just want to comment on, I associate with myself with all the encomiums that have been poured on our company. I just have just a little comment. If you open page 44, you see the faces of the people running the executives running our subsidiaries, managing our subsidiaries. I have 2 faces here, which I just wonder why they are here. If you look at the Managing Director of Chemical and Allied Products and Managing Director of NDS Logistics. I'm not racist, please don't, I'm not racist, but I believe that whatever they are doing, we can do it. We can find one of us who can do it. I think that these positions should be indigenized, Nigerianized. I don't think that we need an expatriate, or we need expatriates for these positions. And then if you open to page 80 also, I note on page 80 the very high cost of sales, almost or a little over 80% of our revenue. I think that we can do better. If we spend all the money we make in managing our sales, then we will not get anything as shareholders to any returns, and I'm not sure that we're going to be happy about that. I know that our company have moved from what it was last year to at least giving us something, but I think we can do better with that. My other comments, I would like the questions I raised to be answered, so I don't want to repeat them. But one that I would want to emphasize has to do with animal feed. I think there is somewhere where you have the photograph of, if you open page 10, you would see the one of the animal, you see the animal feeds, and the one I want to refer to particular, Bingo. I have made a comment on that, but I also think that perhaps the name of the product is not complementary enough. Let me use that word, because there is a common saying: if you feed your dog with the Bingo, it becomes a bingo. And we know what Bingo is. A Bingo is a local dog. For many of us who have dogs, we have French Mastiff, German Mastiff, German Shepherd, and all Alsatian and all that. And we don't want to feed our dogs with Bingo. So please, in addition to the comments that I have made, I think that we should look into the name. Thank you.
Thank you, Mrs. Thorpe. I'm dying to respond to Mrs. Thorpe's comment about Bingo, but I will come to that, Mrs. Thorpe. What I would like us to do is we have a combination of questions that were raised physically and questions that were sent in beforehand. And the questions that were sent in beforehand were actually very comprehensive. So what we're going to do is we're going to first of all, address the questions that were raised in the room, because I think that they would have been top of mind, and presumably they were of sort of just in terms of your priorities. I'm hoping that those are the questions that you felt a greater desire to have answered. And the way I will approach it is we will start with the questions raised by, in this case, Prince Omojala. I will address some of the questions, and then I will hand over to the Group Managing Director and or the CFO as appropriate, and they will answer the questions that relate to the accounts of the company or other matters that they are best able to speak to. So if I may start with Prince Omojala. We also expressed thanks to our long-standing, loyally serving Company Secretary, Godwin Samuel, and to Mr. Ibikunle Oriola, who served us as Executive Director and CFO. And we also thank them, and in particular thank Godwin Samuel who served us loyally for many years. We have thanked them ourselves, and we will convey your thanks to them. You asked a further question about whether there's a limit on the number of shares that the new strategic investors, Themis, are able to buy, and if... Sorry, was this question about UAC or about UPDC? Oh, I'm so sorry. Okay, my apologies. I think the managing director will answer that. But I think the short answer to that is that there is no immediate limit, no limit. But the managing director will speak further on that. Yeah, sorry, I thought this was about. The managing director will also comment on the retention of the audit firms, and also on the resignation of EY. EY have served us meritoriously, and are leaving us, or leaving the audit function for the best possible reason, which is that there are other areas where EY feel, and we feel also, that EY's skills are indispensable to us at UAC. And this was in terms of implementation of SAP, which is crucial to the company, to the group. And it was impossible for Ernst & Young to do both. And so the question was a question of which was more vital to us. And both are extremely important. But we felt that we would be able to find other audit firms that would be able to execute the audit, and that's really the reason why EY are leaving the audit function. Other questions about write-off of inventory, illegal and professional fees, they will be answered by the Group Managing Director. How soon will CAP and the Portland Paints merger materialize? The court sanctioned the scheme yesterday, I believe. So it has materialized. It's been approved by the court. Fola, would you like to answer the other questions from Prince Omojola?
And thank you very much, Chair. And thank you, Prince Omojola, for the words of encouragement. We're determined to continue to work hard to create shareholder value. As regards I presume you're referring to the takeover bid by Custodian, the recently announced takeover bid for 34 million shares. You would note that under the rules of the Securities and Exchange Commission, when a company acquires more than 30% of another public entity, they're required to make a mandatory takeover offer, which was what triggered that initiative by Custodian. As regards the cap of 34 million shares, there's a balance between complying with the requirement to make a takeover bid and also ensuring that UPDC retains a sensible level of free float. As of now, between UAC and Custodian, we have 94% of the company. So that's why that's the balance that Custodian sought to maintain in complying with the securities law and regulation. As regards to the engagement of multiple accounting firms, you would note on page 54 that KPMG serves as internal auditor and manages the whistleblowing line, Ernst & Young as independent auditor, and Deloitte as tax advisor. These things go to the heart of governance and controls, and so we try to find the very best possible firms to serve UPDC in these areas, and there's very little overlap between the work done by these various professional entities. So it's worked very well historically. The chairman has addressed the reasons around EY's retirement after only 6 years, so I will skip that. Your next question had to do with the write-off of inventory of 55 million naira. It's important to put it in context. So first of all, we take the feedback that we don't want to write off 1 naira of inventory. That's the overarching objective. But we had 20 billion naira of inventory, so the amount written off is 0.25%. We'll try and get it lower, but in the context of the volume of inventory, it's de minimis, but we'll still work very hard to try and get it even lower still. Legal and professional expenses increased significantly over the course of last year, but it was also a year in which we undertook a number of corporate actions. We sold to a company to Custodian, sold a company to Imperial, implemented schemes of arrangement, tried to implement mergers and so on and so forth. So it's an elevated base, and we don't expect this to continue aside from years in which we have corporate action that we hope would create value for shareholders. I would skip the 2 questions around travel expenses and AGM expenses, and the group CFO would tackle those expenses. Those questions rather. As regards improving the scale for directors' remuneration, we would also note this and try and make this a bit clearer as we go forward. You had a question about whether the business environment warrants keeping such high inventory. I think there are 2 reasons for the increase in the naira value of inventory. The first is there's been a very significant increase in the price of most raw materials, maize, soya, sugar. So even simply buying the same volume as you bought the year before would increase the naira value of the report. And the second reason is that we saw supply chain disruptions last year. We continue to see them this year. And tactically, if you don't have inventory, you cannot produce. And so we're trying to avoid repeating periods when we just simply couldn't supply demand. We saw that happen in our paints company in the first quarter of this year. Around receivables impairments, we have not seen any uptick in receivables write-offs, but according to the FIRS models, you have to show certain levels of impairment in your books. But we haven't seen any meaningful write-offs to receivables over the course of last year. Non-current assets have come down. Yes, the balance sheets are not directly comparable. You would note that MDS and UPDC were consolidated in the prior year and not in 2020, which accounts for the non-current assets coming down and a big difference between the balance sheet here and here as you look at them. And the chairman has addressed the question about how soon the merger between CAP and Portland will materialize. I think you had a comment about UAC restaurants, and I think we've appointed new management and are working very hard to turn that business around. Thank you, Chair Shula. Yeah. Funke has the expense questions.
Yes.
Thank you. With respect to the questions around the expenses, AGM expenses and the travel expenses, historically, a large proportion of our expenses were categorized under sundry expenses. But what we did this year in 2020 financial statements was for better presentation to strip out some of those costs and group them appropriately. So 2019 costs are actually not directly comparable. And if I give you one of the figures for the AGM expenses, actually in total in 2019 it was higher. It was actually 63 million. Some of the costs were grouped into sundry expenses, and we've disclosed that in the note there. And it's a similar explanation for the travel expenses as well. When you look at historical years, some of those costs were grouped in sundry expenses, but for the last reporting year, for better presentation, we have stripped those out. Thank you.
Thank you. Okay. I'm just looking at the questions that Prince Omojola sent ahead for the Independent Shareholders Association of Nigeria. A number of the questions have either been covered or will be addressed in responding to the other questions. But there are 2 here that I think we should address. Question 10 on partial exits and cash windfalls.
Okay, I think Prince Omojala is trying to reconcile the significant cash inflow with borrowings, with why there's borrowings and repayments. And I think it's important to understand Prince Omojala are very familiar with the nature of the group. So the only two entities that borrow, or historically borrowed, were animal feeds businesses for inventory and UPDC. And the borrowing cycle of the animal feeds businesses, you get inventory in the buying season and process over the course of the year, is quite distinct and separate with the sale initiatives that occurred at UPDC. So the two would not directly tie together. Grand soya oil being scarce in the market, we know, and you may recall that I think last year we announced that we've invested in new capacity, a new oil mill that we hope will come on stream over the course of next year and will ease some of the supply constraints we faced in that particular business. And with the chairman's permission, I'd like to, I think Funke, or the group CFO, mentioned that we had stripped out sundry expenses. I think we should commend the audit committee because they worked very closely with management on providing greater clarity to shareholders in reporting on expenses. Yeah.
Okay. Thank you, Fola. Thank you, Funke. Just take the questions raised by Mrs. Bakare. She had two additional comments. You commended the sustainability report, and we thank you for that. You commended the performance, and you appreciated the ordinary and the special dividend. If I may say, Mrs. Bakare, so do I. Yes, alignment is really important. You talked about some expenses being on the high side, and you hope that those expenses can be brought down. I'll ask the group managing director to talk about expenses and why they are high, and what we are going to do to try and bring expenses, either bring expenses down or bring down the proportion, because there are two ways you can deal with it: bring the expenses down or reduce the proportion of your revenues that those expenses account for. I'll let the managing director speak to that.
Thank you, Chairman. As regards expenses, I think last year we should strip the increase into two separate components: the recurring ones and the non-recurring ones. The non-recurring ones were the donations we made on account of COVID, about 200 million naira, and the legal expenses optic of about 500 million naira that I think we've discussed already. For the recurring expense, I think the chairman is right. What we track is operating expenses as a percent of sales. So if that number goes down, the margin improves. If it goes up, the margin declines. We made a conscious effort over the last sort of 2 years to invest in the company for growth. We took feedback from shareholders to be careful that we don't let costs run too far ahead of revenue. And if you look at our Q1 results from this year, you would note that across all our segments, OPEX as a percent of sales have come down. So it was a deliberate effort to invest for growth. We took the feedback from shareholders to ensure we didn't let the investment run too far ahead of the growth. And we're fortunate that we've seen the benefits begin to come through over the course of this year. Thank you.
Thank you. Then the number of questions that Mrs. Bakare submitted in writing on behalf of the Pragmatic Shareholders Association of Nigeria. If we could go to the really address the 4 questions at the bottom, and I'll leave you to decide whether it should be yourself or our CFO who addresses them.
Okay, so just for the benefit of shareholders on the live stream, I would read out the questions and then I address a couple of them, and then the group CFO will address the others. So the first was, what are we doing to address currency exposure risk as a result of devaluation of the naira, given the fact that our company imports most of its raw materials? It's a pressing concern that affects many companies in Nigeria. I would like to commend, I think, the central bank, because we operate in the real sector of the economy, and I would say the central bank has been has been on the front foot in ensuring that those of us who are in the real sector receive allocations of FX to meet our import needs. Having said that, we do very little direct importation in our businesses. Our paint companies import directly, and our animal feeds companies import a little bit directly, and we're supported in those regards. Now, even for those companies that don't import directly, there's rising input costs because you're buying from companies that import directly. And what we try to do is, first of all, see where we can be efficient, take out costs from the manufacturing process. And the second is to be very thoughtful in terms of pricing, so that our gross margins don't collapse. So it's difficult. I'm not trying to downplay the difficulty, but with some support and proactive management, we would hopefully be able to navigate this. The second question is, why was there no dividend income from third parties for companies in 2009, but we have for companies in 2019? Thank you very much. But we have for companies in 2020, and I'll ask the Group CFO to please address that.
Thank you. The company did earn income from third parties in 2019 and 2020. What we've done in the 2020 year is we actually improved on the disclosure. So in 2019, there was one line that showed the dividend income received, which was a consolidated one. But for 2020, we've decided to break it down. So in 2019, we actually received 6.4 million from third parties, and in 2020, that was 9.7 million. Thank you.
Thank you. The next question, I think the next question is refer to pages 80 and 132. On other operating income, you recorded 631 million profit from sale of investment property. What exactly is the associated cost of transactions vis-a-vis amount paid as commission to financial advisor, and was this carried out at arm's length? I think the short answers there is arm's length basis. The buyer has no relation to UAC, and I think total transaction costs as a percentage of the value was less than 2%, I think 1.7% or so. And I think the final question refers to page 133, expenses by nature. There was a 684 million loss on lease termination. What exactly is the nature of the lease, and why have we incurred such a high loss? And I'll ask the Group CFO to please address that. I think the actual number is much lower than 64 million. That's yours.
Okay, thank you. When you have a lease termination adjustment, it happens when there are modifications to the terms of a lease. In our animal feeds business, they had some warehouses that they were renting long term, and they decided that those were no longer required. So those leases were terminated, and off the back of adjusting the terms of the lease, we've incurred this loss. Thank you.
Thank you, Funke. But I think the number is much lower than 64 million, but we can share the exact details with you.
Yes, it's 68.4. It's 68.4 million, not 684.
All right. Thank you, MD, CFO. I'd like to answer the questions raised by Mrs. Thorpe, and I will start with the questions that she raised at this meeting. The first question, which relates to page 44 of the annual report, was why do we have expats? This is my version, my language, not yours. Why do we have expats in the leadership of CAPL and MDS Logistics? So let me start with this. The hiring decisions for both those companies are made by their respective boards. Let's start with this. CAPL, separate legal entity, listed, etc., etc. MDS Logistics, now an affiliate, subsidiary of Imperial Logistics. The boards of those companies make the hiring decisions. But this is not a cop-out, because they make those hiring decisions with the support and the assistance of their partner, UAC, because we know the country since 1879. Okay? What I would say about this is that it's about talent and where we can find the talent. The moment we begin to localize the search for talent, I think we are effectively saying that our children who seek to work in other jurisdictions will have to take a back seat to the nationals of those jurisdictions simply because they're not from there. And yet we know that you have qualified Nigerians that are working in all sorts of capacities in all sorts of countries in the world. Because in those countries, the metric is talent. So, I'm speaking for myself now, and for the executive management, do I personally care whether Mr. Wright and Mr. Bressler are white, pink, green, or blue? Personally, no. Do I care whether they were the best people we could find or we could support the finding of for those jobs? Yes. That's really, really, really important. Now, it's interesting that you asked this question. It's one I feel quite, and you can tell, I'm sure you can say I feel very passionate about it. When we were looking for supporting the search for a new CEO for our Grand Cereals business, we looked everywhere. Everywhere. Honestly, Mrs. Thorpe, we looked everywhere. We looked in India. We looked where else? South Africa. And in the end, where did we find the new CEO for that business? We found a Nigerian already working with a Nigerian company that had a substantial foreign shareholding, and who, praise God, is from Plateau State. What could be better? We didn't set out looking for Nigerian, black, pink, white. We just looked for the best person. And you know what was interesting? Was he was the person we wanted to hire from the start. From the start. But he was not available. He wasn't ready. And so we looked red, white, pink, green, blue. Did not find. Either they didn't have the right qualifications, or they were not willing to work outside Lagos. There are any number of reasons, or their families, etc., any number of reasons. So please be assured, and I say this to all the shareholders, while the focus is on talent, obviously we're not leaving common sense behind. So, because, talent, it has to be talent that we can afford. It has to be talent that is willing to live and work hard in Nigeria. And even for us who are Nigerians, it's hard living here. For all of us, it's hard. There's no water, there's no light, there are no roads, etc., etc., etc. So it's hard. And so when you're looking for talent, it has to be talent that's willing to deal with the same day-to-day issues that we deal with. But please rest assured that we will, in the search for talent, we are mindful of all of these things, and we're also mindful that we don't in the execution it is accretive to shareholder value. That's what I would ask you to trust us. High cost of sales, I will leave to Mr. Ayeshimoju in a minute. Bingo. Mrs. Thorpe, This is one where I have recused myself from the decision, because I personally like the name Bingo, but I'm in a I suspect in the universe I'm in a minority of one, because nobody else is particularly enamored of the name. But then again, I'm not in the management of Grand Cereals. But Mr. Ayeshimoju will tell you what the thinking is around that product. And all I will say, and my own dog, singular, is not a big dog, is a tiny little thing. And that may have something to do with why he likes Bingo. And even though I think he's of indeterminate pedigree, and probably close to the Bingo of Bingo fame. But he does like Bingo. So there's hope. Fola, please.
Thank you very much, Chairman. I would, on cost of sales, we strive very hard to reduce cost of sales, but what we really track is the gross margin, is how much more can you add on to the cost of sales. It's been a very tough period with inflation at 18%, but we've taken certain action that we hope would. The first, you have seen our Q1 result was still very tough. That would hope we'll begin to see a reversal in the gross margin, which is, and we're pulling two levers. One, what can we do around conversion costs? With inflation at 80%, there's not much you can do about the price you pay for the commodity. But we're trying to see how we can reduce the amount we spend converting the commodity and trying to push price a little bit. I will not delve into the Bingo conundrum, but if you look at the page you shared, I'd ask you to look at page 10. If you look at the bottom of page 10, you will not see Bingo. You will see Grand, Vital, and Best Mate. And listening to the consumer, the management at Grand Cereals concluded that there needed to be a master brand for pet food, which is Best Mate, and shortly there will be other variants of dog food launched, so that both yourself and the chairman can be satisfied. So that's that one. There are a few questions that you shared in writing, and I think very quickly on the chief executives, David and Andre are the CEO of CAP and MDS. There's zero difference in their settling in and behavior between Goye and Alex Goma. But we have three criteria when we work with the boards of companies and looking for a CEO: country, sector, and technical. So technical is, can the CEO define strategy, recruit a team, and execute? Do they know the sector, and do they know the country? The perfect CEO, you find all three, but they're because we're market leaders in many segments, it's very difficult to find all three. CAP is already the biggest paint company in the country, so you're not going to find someone in the paint sector that is going to have greater industry experience. And so we're forced sometimes to, we look, if you don't find all three, then you try and find two. Hopefully you never settle for one. But that's the very clear framework. Country, sector, and technical knowledge is what we found. And we found that if you have to compromise, country is the one you compromise before you compromise sector and technical knowledge. So that's the framework we go with. Your first question had to do with expenses. I think travel expenses, AGM expenses, and stationery. I think the group CFO has addressed that it's mostly classification. Around printing and stationery, again, when you do a lot of corporate action, you print materials for that. The next question you had to do with a reduction in staff strength of 90, but a significant reduction in expenses relating to pension and gratuity from 320.6 million to 25.4 million. And I will ask the group CFO to kindly address that.
Okay. Just to clarify, the 25.4 that you're referencing in terms of the pension contribution is for the key management personnel. The pension contribution for all the other staff is actually included in the other salaries and wages. Thank you.
And just to explain why there's such a huge difference, over the course of 2020, we moved to a clean wage rather than have employee compensation paid in various buckets. And so if you look at the wage and expense bill, the bulk of what you'll have seen before carved out as pension would now just go through the wage bill. That's why there's that big drop, a reclassification. The next question from Mrs. Stop has to do with Mr. Biggs. A number of outlets have closed down, not surprising, thereby increasing decommissioning liability. With the exception of those in places like ShopRite, most of the outlets are not welcoming. What are you doing to change the character from the dark and dingy look to one which will get the franchisees smiling to the bank? It's a very painful but relevant question. I think on the quick service restaurant space, which is where Mr. Biggs sits, we took about a year reviewing this company, and we were going to take one of two decisions: close it down or invest for growth. Was the very binary choice we were going to take. And in working through a conclusion, we asked ourselves, is the sector viable? Because if the sector is not viable, no matter how hard you work, you won't make money. And the answer was a resounding yes. You can make money in the quick service restaurant business. The second question was, are brands, Mr. Biggs and Debonair, still relevant with the consumer? And we got a theoretical answer, yes. And to test it, we actually built 5 new corporate stores, and all of them are performing ahead of plan, revenue and return. So with sector, yes. Are brands still viable? Yes. The board of UAC endorsed, alongside with our partners, Famous Brands, a significant investment in the QSR space, and has put in place a management team to execute that initiative. It will take time, but I'm very confident that if we look back in 2-3 years from now, it will be a transformed business to what we have today, and we expect it to become a meaningful contributor to the company's earnings. Your next question has to do. Did you have a question? Comment, okay. The next question is from pages 11, 15, and 138 of the annual report. Earnings per share of 92 kobo, out of which 65 kobo is to be paid as dividend, but the proposed dividend is 120. Cannot locate where the special dividend of 65 kobo is coming from. Can it be from the proceeds of the sale of 51% stake in UPDC? I think it's a very relevant question. The way we think about dividends is in we check the two determinants of the ability to pay a dividend. And the first is, do you have the liquidity? Do you have the cash to do so? And under the new Finance Act, do you have the reserves to do so? And so we have the retained earnings to do so. And on account of some of the initiatives that occurred in 2020, we had the liquidity to do so. Our approach is to maintain a dividend level. We've been paying 65 kobo, and we paid a catch-up dividend of 55, because you know that the year before we paid 10 kobo in dividend. So that was the framework that we used to arrive. First of all, can we afford it? And do we have the reserves? And the approach is to try to maintain a particular dividend level. The next question relates to unclaimed dividend. There was a write-back of unclaimed dividend of 206 million naira. It is good, but what are you doing to reduce the amount of over 3.5 billion, given that dividends 44, 45, and 46 would soon become statute barred? Since the FGN has its eye on unclaimed dividend, reduction is key. I would kindly ask the group CFO to explain what we're doing around reducing the unclaimed dividends balance and the progress to date. And I would also add that it's a topic that the chairman takes very, 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 very seriously. It's one of the areas that we get that is followed up on aggressively at board meetings.
Thank you. As Fola said, we've taken the unclaimed dividend position and reducing it quite seriously. Over the last 18 months, actually, we've worked very, very closely with our registrars. We've embarked on a number of initiatives, and we actually had a plan together with UAC's Investor Relations Unit, and that plan involved a number of things, including calling shareholders, locating them via their addresses, sending emails, text messages, putting the entire list on our website, and reaching out to others in the industry as well. And I think over the course of all those initiatives, we were actually quite pleased, because when we looked at the balance from when we started reaching out to shareholders, we had reduced it by about 270 million naira. And also in terms of the shareholders that have registered for electronic dividends, which means if you're registered for electronic dividend, anytime a dividend is declared, you automatically receive it. And we're pleased about that result as well, because over the period, we've seen an additional 10,000 individuals sign up for the e-dividend, which means we have over about 60% of our registered today are actually signed up onto the platform. So the dividend that would be paid shortly would also go to members directly. So I think this one is quite important to us. We want to ensure that those that have dividends come and claim them. And we also work with the shareholder associations as well to encourage them to look through the list and identify any names that are familiar so that they can come and claim them. Thank you.
Thank you, Funke. Shareholders who were here last year will recall that I committed to do something about this. And so Funke has been working very hard with the registrars, and I have been asked questions about where we are, and what else we can do. I think it's a process, but they're certainly doing the right things, and I have asked that they do more of those things and try and see if we can get that number down even further. And I have received a commitment that they will do their very best. I have one comment here I'd like to address. We had written questions from Ganiat Shiombola, president of the highly favored.
No, there's one more from Mrs. Stop. Mrs. Stop had one more question.
Oh, sorry. Did you have one more that we didn't address? I'm so sorry. That was on bingo, wasn't it?
Well, Grand Sales is the only large industrial company in Nigeria making dog food. However, most dog owners prefer imported brands because the dogs don't do well with our bingo. Although it claims to have 26% protein, the protein content hovers around 18% or less. What are you doing to address this problem? Moreover, it lacks the essential amino acids, whereas the imported ones with amino acids have between 20 to 35% protein. I think feedback very, very well received. As I mentioned, we're going to do 2 brands, and we're working with partners on relooking the formulation for bingo itself to get the protein levels up and improve the amino acid composition. Thank you.
Yes. It's interesting, Mrs. Thorpe, that you raised this. The bingo actually has an interesting position in the market and potential. And this struck me when, at the height of COVID, when there were supply chain disruptions and we couldn't find dog food to buy. Just couldn't be found. And what it told me was that with the right product and at the right price, that there was an even greater market. I found bingo, just to say that there was an opportunity. So yes, it is. But thank you for the comment. I think it's really important, and it shows clearly your comment about protein and amino acids shows that you understand your dog food. If I may take one question, Ganiat Shiombola, President, Highly Favored Shareholders Association. She asked a question about the composition of the board, 9-member board, 1 woman. This is something that the board is equally concerned about. And the governance committee is looking at, and the board is committed to improving these numbers. And I feel fairly certain that the numbers there will be a shift in the numbers between now and the next annual general meeting. And if there isn't, do please hold me to it. If there are no other questions, and I really do thank you again for the questions. They are really useful feedback, and it's important for us as fiduciaries of shareholders' monies to know what the people we are acting as fiduciaries to think about our performance. So thank you. There are no other questions. We can now proceed to the declaration of a dividend. No other questions? Thank you. I now move that an ordinary dividend of 65 kobo per ordinary share and a special dividend of 55 kobo per ordinary share for the year ended 31st of December 2020 be declared payable on the 1st of July 2021 out of the retained earnings of the company to all shareholders registered in the books of the company at the close of business on Monday, 14th of June 2021. Would someone please second the motion? Someone to second the motion? Mrs. Stop. Please. I now put the motion to the meeting. Registrar, whenever you're ready.
Thank you, Mr. Chairman. For the declaration of dividend, the result of the poll is as follows: 1,267,196,461 units of shares, representing 100% of the votes cast by proxy, voted in favor of the resolution. None of the votes cast by proxy voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I declare that the motion has been duly carried. The next item of business is to disclose the remuneration of managers of the company. The manager's remuneration appears on pages 134 and 135 of UAC's 2020 annual report. May I, with your permission, take the remuneration as disclosed on pages 134 and 135 of the annual report as read? Thank you. It is now time to vote on the re-election of directors. I am one of the directors retiring by rotation at this meeting, and Mr. Bolaji Odunsi is the other director. The group managing director, Mr. Fola Ayeshimoju, will preside over the proceedings relating to my proposed re-election.
Thank you, Chairman. I move that Mr. Daniel Agbo be re-elected as a director of UAC of Nigeria PLC. Would someone please second the motion? Thank you very much, Mrs. Bakare. I now put the motion to the meeting. Registrar, please give us the results.
For the resolution to re-elect Mr. Daniel Agbo as the director of the company, the result of the poll is as follows: 1,225,320,458 units of shares, representing 96.7% of the votes cast by proxy, voted in favor of the resolution. 41,876,003 units of shares, representing 3.3% of the votes cast by proxy, voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I declare that the motion has been duly carried. I now hand over to the chairman to preside over the remaining business of this meeting.
Thank you, Mr. Ayeshimoju, and thank you to the Mrs. Bakare for seconding the motion, and to the shareholders for continuing to entrust me with being your fiduciary, and therefore, and consequently, as a result of that, being chairman of the board. The other director who is due to be offering himself for re-election is Mr. Bolaji Odunsi. And I hereby move that Mr. Bolaji Odunsi be re-elected as a director of UAC of Nigeria PLC. Would someone please second the motion? Prince Omojala. Thank you very much, Prince Omojala. I now put the motion to the meeting. Registrar, at your convenience.
Thank you, sir. For the resolution to re-elect Mr. Bolaji Odunsi as the director of the company, the result of the poll is as follows: 1,225,313,070 units of shares, representing 96.69% of the votes cast by proxy, voted in favor of the resolution. 41,883,391 units of shares, representing 3.31% of the votes cast by proxy, voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I declare that the motion has been duly carried. The next item of business is the appointment of the external auditors. And as already indicated, Ernst & Young will be retiring at the end of this annual general meeting. And it is proposed that KPMG Professional Services be appointed in their stead. I hereby move that KPMG Professional Services be appointed as the external auditors of UAC of Nigeria PLC in place of the retiring external auditors, Ernst & Young. Would someone please second the motion? Mrs. Bakare, thank you. As earlier stated, voting on the motion will be conducted by poll. I now put the motion to the meeting. Registrar?
For the resolution to appoint KPMG Professional Services as the external auditors of the company, the result of the poll is as follows: 1,267,196,461 units of shares, representing 100% of the votes cast by proxy, voted in favor of the resolution. None of the votes cast by proxy voted against the resolution, and there is no abstention. Thank you.
Thank you, Registrar. I declare that the motion has been duly carried. It is now time to vote on the remuneration of the external auditor, and I move that the directors be authorized to fix the remuneration of the external auditors for the year ending 31st of December 2021, and that such remuneration be fixed at the sum of 24,725,000 naira, VAT exclusive. Would someone please second the motion? Mrs. Stop. Okay. Thank you, Mrs. Stop. Yes, Ms. Prince Omojala.
Sorry, I thought such derivation to be subject to all the committee's advice in coming to council the remuneration. I don't think it will defer to the audit committee for the elevation and agreement. Since they are coming in for the first time.
Are we talking about the
remuneration of the auditors. No, the committee will advise them. And since they are coming in for the first time, the agent cannot fix their remuneration.
Okay, I understand it has gone to the audit committee. Funke?
Yes. It has been presented to the audit committee. The appointment of the new incoming external auditor as well as the remuneration.
Yeah, it was the appointment of the external auditor.
Yeah.
Presented at the audit committee meeting.
What is the remuneration?
Yeah, as well as the remuneration.
Okay.
It was presented at the audit committee.
All right. I'm glad that has been cleared up. Thank you, Funke. Thank you. Thank you for, as I said, if you have any concerns, it's important that you raise them. Would someone please second the motion? Prince, I want you to second it.
Yeah, we only want it to be in line.
Absolutely. Will you do us the honor?
Yes.
Thank you very much. I now put the motion to the meeting. Registrar?
For the resolution to authorize the directors to fix the remuneration of the external auditors, the result of the poll is as follows: 1,225,510,262 units of shares, representing 96.71% of the votes cast by proxy, voted in favor of the resolution. 41,686,199 units of shares, representing 3.29% of the votes cast by proxies, voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I declare that the motion has been duly carried. The next item on the agenda is the election of members of the Statutory Audit Committee. The Company Secretary has reported that pursuant to Section 404, subsection 6 of the Companies and Allied Matters Act 2020, 4 valid and subsisting nominations for election to UAC's Statutory Audit Committee were received within the statutory time limit, i.e. 21 days before this meeting. Registrar, if you could please provide us with the names of the nominees and their nominators.
Page 9. Another page 10.
I think it's on page 10, yes.
Is it the registry? Is the Home Secretary that should have read? Not the registrar.
Okay, thank you very much, Mr. Chairman.
No,
The four.
yeah, I think the Company
It's the
Secretary.
Company Secretary that should read that. Because it's not going to be by poll.
One second.
I think it's fine.
Thank you, Mr. Chairman. And thank you, Registrar, for your willingness to oblige. The 4 nominees for Statutory Audit Committee of UAC PLC, UAC of Nigeria PLC are Mr. Olabisi Fayombo, nominated by Obarinde Isaac Obatosho, Mr. Matthew Akinlade, nominated by Chief Timothy Ayobami Adeshion, Mr. Nnabike Kenneth Nwosu, nominated by Igrude O. Moses, and Barrister Ganiat Adetutu Shiombola, nominated by Mr. Michael Olusegun Adewusi.
Thank you, Company Secretary. Voting on the motions for the election of members of the Statutory Audit Committee will be conducted by show of hands of every shareholder physically present in this meeting who has been accredited by the registrar. So we would be grateful if you would please vote for the 3 nominees who you would like to represent you on UAC's Statutory Audit Committee. Let us now proceed with the voting. Sorry, you have a comment?
I say one by one.
Absolutely, absolutely. Would all those in favor of the election of Olabisi Fayombo as a representative of the shareholders in the Statutory Audit Committee of the company please signify by raising their right hands? Thank you. Would all those in favor of the election of Matthew Akinlade as a representative of the shareholders in the Statutory Audit Committee of the company please signify by raising their right hands? Thank you. Would all those in favor of the election of Nnabike Kenneth Nwosu as a representative of the shareholders in the Statutory Audit Committee of the company please signify by raising their right hands? Thank you. Would all those in favor of the election of Ganiat Adetutu Shiombola as a representative of the shareholders in the Statutory Audit Committee of the company please signify by raising their right hands? Thank you. The totaling of the votes, and this is the first time I've been in a position where I too can total the votes. The totaling of the votes indicates that the results of the election are as follows. Mr. Matthew Akinlade, 4 votes. Mr. Olabisi Fayombo, 3 votes. Mr. Kenneth Nwosu, 3 votes. Ganiat Adetutu Shiombola, 1 vote. I therefore declare that the following shareholders representatives, or the following shareholders have been duly elected as representatives of the shareholders on the Statutory Audit Committee. That is Mr. Olabisi Fayombo, sorry, Mr. Matthew Akinlade, Mr. Olabisi Fayombo, and Mr. Kenneth Nwosu. In addition, the shareholders have resolved, the directors have resolved to elect 2 of their members to represent the board on the Statutory Audit Committee. And the 2 members of the board that will be representing the directors on the Statutory Audit Committee are Mr. Babatunde Kasali and Mr. Bolaji Odunsi. Now, we now have the data, the information we need to put the motion proper to the meeting. I hereby move that the following shareholders' representatives, namely Mr. Matthew Akinlade, Mr. Olabisi Fayombo, Mr. Kenneth Nwosu, as well as the following directors' representatives, Mr. Babatunde Kasali and Mr. Bolaji Odunsi, be and are hereby elected as members of the Statutory Audit Committee. Would someone please second the motion? Mrs. Bakare seconds the motion. I now put the motion to the meeting. This is the motion proper. Those in favor? Thank you. Those against? I declare that the motion has been duly and unanimously carried.
Congratulations.
And that the persons whose names I have mentioned already, who you have just elected as members of the Statutory Audit Committee, will hold office until the conclusion of the next annual general meeting. This concludes the ordinary business of the day. Let us now proceed to the special business of this meeting. The special business of the first item of special business for this meeting is the fixing of the remuneration of the non-executive directors of the company. I hereby move that the sum of 106,580,296 naira and 33 kobo be approved as the remuneration of the non-executive directors of the company. Would someone please second the motion? Thank you very much, Prince. Prince Omojola seconds the motion.
Thank you.
I now put the motion to the meeting. Registrar, at your convenience.
For the resolution to approve the remuneration of non-executive directors, the result of the poll is as follows: 1,267,196,461 units of shares, representing 100% of the votes cast by proxy, voted in favor of the resolution. None of the votes cast by proxy voted against the resolution, and there is no abstention. Thank you.
Thank you, Registrar. I hereby declare that the motion has been duly carried. The next item of special business is the renewal of the general mandate for recurrent transactions with related parties. I move that the renewal of the general mandate authorizing the company to enter into recurrent transactions which are of a trading nature or those necessary for its day-to-day operations with related parties or companies in accordance with the rules of the Nigerian Stock Exchange governing transactions with related parties or interested persons be approved. Would someone please second the motion? Please.
I second that motion.
Thank you, Mr. Akinlade. I now put the motion to the meeting. Registrar?
For the resolution to renew the shareholders' general mandate to the board of directors with respect to recurrent transactions with related parties, the result of the poll is as follows: 1,267,196,461 units of shares, representing 100% of the votes cast by proxy, voted in favor of the resolution. None of the votes cast by proxy voted against the resolution, and there is no abstention. Thank you.
Thank you, Registrar. I hereby declare that the motion has been duly carried. The next item of special business is to approve the long-term employee incentive plan proposed by the Board of Directors. I hereby move that A, subject to all requisite regulatory approvals, that the company hereby approves the long-term incentive plan, i.e. the LTIP, described in the notice of the AGM, and that the directors be and are hereby authorized to take all such steps and to do all such things as are required to give effect to the establishment of the LTIP, including but not limited to the establishment of an employee share option scheme, the VCP, as the component of the LTIP, subject to a maximum size of 10% of the issued share capital of the company. B, the VCP shall be administered by the board, and the board may, in its discretion, do so through the appointment of a trustee on such terms and conditions as may be approved by the board. C, in order to give effect to the VCP, the board may authorize 1, the issue of any existing unissued shares in the capital of the company. 2, the issue of new shares. Or 3, the purchase by the company of its own shares on the floor of the Nigerian Stock Exchange, whether solely or in such combination as the board may determine. D, any shares purchased by the company on the floor of the Nigerian Stock Exchange shall not at any time exceed a maximum of 10% of the issued share capital of the company. E, with respect to the issuance of any new shares in connection with the VCP, any and all preemptive rights of the shareholders of the company, including such preemptive rights conferred by law or pursuant to Article 52 of the company's Articles of Association, be and are hereby waived. And F, the authorizations granted to the board of the company with respect to the VCP shall remain valid and effective unless amended by the shareholders in general meeting, for as long as the VCP remains in operation by the company. Would someone please second the motion?
Observation. I think that the chairman should give us some explanation of this process and procedure. There are 5 pages explaining this here, of notes explaining it, and I am not sure that it is easy for the ordinary shareholder, the routine shareholder to understand, although it's for the benefit of our staff, but I believe that many would want to understand what's going on. I can tell you that even lawyers who study secured credit transactions would have some difficulty understanding it. So I think you should just go into explanation.
Okay. I will provide a high-level explanation of why we thought it was necessary, why the board thought it was necessary to develop a long-term incentive plan for the executive management, the senior members of the leadership team. And the managing director will provide sort of more granular detail if you require it. We talked about talent. This is both about attracting and retaining talent. Certainly one of the things that we have found in UAC is it was initially, there's a real challenge in retaining talent. For the reason that I gave you earlier, which is that the search for talent is global now. And so we can't live in our little bubble and say, okay, fine, we're going to compensate our employees with X, when actually the market for their services, and these are people who are extremely mobile, is multiples of X. Now, obviously, all of this has to be put into context. But one of the things we thought we could do to try and enhance our ability to attract and retain talent was to establish a long-term incentive plan. Not very many Nigerian companies, certainly listed companies, have long-term incentive plans of this type. And so what we did was we retained the services of PwC UK, and PwC UK had supported a Nigerian listed company in developing a similar plan for its employees. And they were able to bring both a global perspective as well as Nigerian context to bear on developing this plan. And really, the idea is to create alignment between the potential beneficiaries of the plan and all of us. You notice I say all of us, because we can see I too am inside the matter. All of us. By ensuring that the better the company does, the better they do. But not that if they have a hurdle, just to put it plain speak, they have a threshold that they must meet before the long-term incentive plan kicks in. And that hurdle is over a period of 5 years. They must achieve annual returns of 18% per annum over a period of 5 years. Only then, and you can do the maths, because it may not be 18% in every year, it could be a bumper year in 1 year. And only if they achieve that will they be eligible to, this is all things being equal, to benefit from the long-term incentive plan. The idea being, at least they would have, I was going to say they would have made the shareholders happy, but it's not quite as simple as that, because we're all battling with inflation, okay? But at least the shareholders would have been, Mr. Yoshimoji, reasonably pacified. And I can tell you, shareholders, I give them a hard time on our collective behalves, because the more money they make, the more money we all make, and I remind them that we don't make money, they don't make money. Okay. So that's the theory of it. That's the broad context. Fola, do you want to talk about? Is there any detail you'd like to shed light on, to Mrs. Thorpe?
Please, can I just make a comment for that detail? Because that 18% for 5 years was actually one of the issues that caught my attention.
Please.
And I felt that if you want it for retention of staff,
yes, I
think 5 years is too long. You've hardly, that's my comment when I read this. I think 5 years is too long.
So, Mrs. Thorpe, whose side are you on?
I'm on the side of the staff. I'm on the side of the staff. But when I read it, I was happy because I've dealt with this kind of thing before. I was happy, but when I saw that 5 years, and you want to retain staff.
Okay. Mr. Yoshimoji.
So the first measuring date is the 3rd year, the second is the 4th, and the 5th to exactly address, to balance long term with people having a horizon that they can see. So the first measuring date is the 3rd anniversary of the scheme.
Mrs. Thorpe. But look, I was being facetious. I think Mrs. Thorpe is right. With these things, you have to strike a balance between what is good for the shareholders and what is good for the employees. And if you don't get the balance right, ultimately the shareholders will not derive the full benefit of the talent that they have worked so hard to attract to this organization. And by the way, one of the things I'd like to urge all the members of the shareholders associations who are here, I don't know who's going to do this, is that before you leave, please ask to be taken around. In fact, don't ask. I insist that you look at our new offices. It's the same old office, but I think that the work that has been done by our executive management gives you an indication of what UAC's aspirations are and why we need to ensure that we retain and motivate, most importantly, the talent that we currently have. Is there anything else you would like to add?
I think the mechanics are quite simple. First measuring date is year 3 and last is year 5. If the shareholder return, dividends, capital return, share price increase is less than 18%, the staff get nothing. It affects all the staff in the company, not just the executive. And if it's more, then the employees get a share of the gain. And because it's a share of the gain, the staff are motivated for the return to be 18, 19, 20, 30, 40%, because the better the return to shareholders, the better the employee experience. And it's also a tool to manage recurring costs, because there's now a mental trade-off. Do you want more salary, which will depress the share price, or do you want to create wealth? So it actually helps as a management tool.
Do you want to talk about the 10% dilution limit?
Yes, it's capped at 10% of the shares outstanding. So even if management created 100% return year on year, there's a cap on the dilution that shares would suffer to 10%.
Again, that's shareholder protection. The other thing, which is a little different here, and which was not as easy to do under our old Companies Act, is the fact that the company UAC has two choices. UAC can either create additional shares, or UAC can actually, if UAC is flush with cash, can actually go and buy shares for the scheme on the floor of the stock exchange. So in order to do, that's why you have a resolution there waiving preemptive rights, in order to provide the company with flexibility as to how to provide shares for the scheme. Mrs. Top, does that help?
Yes, thank you. Thank you.
Yeah. And I'm glad actually that you asked the question, because I had wondered why I had wondered whether this was a question that a shareholder was going to focus on, because it's really, really important to all of us that it be done, and it be done properly. So I now put the motion to the meeting. Registrar.
Of the resolution to approve the subjoined resolutions A to F, a special resolution of the company. The result of the poll is as follows: 1,193,341,072 units of shares, representing 94.22% of the votes cast by. Sorry.
I'm so sorry. I didn't have someone second it.
Okay.
We need a seconder. Mrs. Top, I'm looking at you.
Second it.
Mrs. Top. Mrs. Top. I was looking at Mrs. Top, and Mrs. Top volunteered herself to second the motion. Thank you, Mrs. Top, for allowing yourself to be volunteered. Registrar, please, if you could start again.
Thank you, sir. For the resolution to approve the subjoined resolutions A to F, a special resolution of the company, the result of the poll is as follows: 1,193,941,072 units of shares, representing 94.22% of the votes cast by proxy, voted in favor of the resolution. 73,255,389 units, representing 5.78% of the votes cast by proxy, voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I hereby declare that the motion has been duly carried. The last item of special business on the agenda of today's annual general meeting is the amendment of the Articles of Association of the company. Such amendment is required by law to be approved by a special resolution, i.e., by a resolution passed by at least 75% of the votes cast by members of the company voting either in person or by proxy. I hereby move that the Articles of Association of the company be amended by the insertion of the following new article as Article 14. And I quote, acquisition by the company of its own shares. Subject to compliance with all applicable laws and regulations, the company may purchase any of its fully paid shares. And as I explained, this is really in order to facilitate execution of the long-term incentive plan. Would someone please do me the honor of seconding the motion? Thank you very much, Mrs. Bakari. I now put the motion to the meeting. Registrar?
For the resolution to approve an amendment of the Articles of Association of the company, the result of the poll is as follows. 1,193,941,822 units of shares, representing 94.22% of the votes cast by proxy, voted in favor of the resolution. 73,254,639 units of shares, representing 5.78% of the votes cast by proxy, voted against the resolution. There is no abstention. Thank you.
Thank you, Registrar. I hereby declare that the motion has been duly carried. This concludes all the items on the agenda for this annual general meeting. Distinguished shareholders, ladies and gentlemen, on behalf of the Board of Directors of UAC of Nigeria PLC, I'd like to thank you for your participation in this meeting, your cooperation as always, and your continued interest in the affairs of our company. Given the particular challenges that the world faces at this time, I would also like to wish everyone continued good health and to bid everyone that you stay safe. I now declare the meeting closed and would ask that we all rise for the national anthem.